All right, so we are live on YouTube as well as TikTok. We're going to wait a few more moments just so people can, the rest of the people can kind of get in. I just notified it on Discord. So it'll be a few moments here. We are seeing a nice little squeeze here on BTC. We will talk about it quite a bit more in depth later in the video. Also, if you are watching this as the live version recorded, we do provide a recorded version with timestamps so you can go to each of the sections. We do cover a lot of different assets in order to create our risk sentiment. So it's good to timestamp it, and then you can go to each of the different assets that we do provide analysis on. So don't think gonna wait much more. Gonna get a little bit of coffee, and then we'll get right into the global macro update for today. It's a good Friday. Sun shining. Stock market is down, but if you're long things that are risk off, you're having a great day today. And it's just a matter of if we're going to break down or not, but we'll see how it goes. And I think we're going to start our video right now. All right, get the recorder going. And no real discussions for today in terms of news. Don't really see anything that's extremely fundamentally important for today. But you never know what kind of tweets are going to be coming up a bit later on. And all that stuff. So let's get this going. Also, if you do have any questions, you can drop them in the comment section below, and we will be reviewing questions in between the asset classes that we are conducting an analysis on. So just a fair warning, if you have a question, comment, whatever the case may be, you can drop them in the comments. I will be looking at comments frequently throughout the video. So we can get this started right now. Just wanted to let you know beforehand. All right. Hey traders, welcome to another global macro update. We'll be going over some stocks, equities, mostly indexes, and then we'll be going over some bonds, oil, a little bit of currencies, mainly the DXY, which is the US dollar index, and then we're going to go over crypto as well. So no real fundamental news for the day. We're just going to get right into the charts. And we can start off with the S&P 500. So first things first, we can see from the resistance that we initially had, let's just get our snip and discuss what we talked about yesterday, so then we can understand what happened and then where we could possibly go from here at this point. So we were making, let's just get this white. We were making a bullish move from this minor little resistance level horizontally. And yesterday, we were just forming highs on top of here, and we discussed how we would really like to see a rejection off of that level in order for us to create a descending wedge formation. You have one rejection, the second rejection, and this is now the third rejection, validating it as a dependable zone that we can use in order to potentially look for a long if it does break the resistance level, which would be a risk on sentiment. You'd be looking to potentially put on trades long on other indexes. The US dollar would probably be going down. Volatility overall is probably going down in terms of the VIX. And that's the environment that we would be looking in if we do see this descending wedge break to the upside. We already talked about the two different scenarios that we're going to get if we are looking for either a short or a long. Look at the previous video that we made for our global macro update if you would like more information on the potential move to the upside or the potential melt down. Descending wedges usually are looked at as bullish price action patterns. And yes, if they're in a bullish momentum, it's definitely an extremely solid price action pattern to use in your continuation to carry the momentum, but they can melt down as well, where it breaks a series of lower lows. It makes a substantially lower low. It retests the previous series of lows as a new level of resistance, and that is hopefully we're going to get a zone of confluence where you have a previous level of support or resistance, creating a more dependable zone that you can use in order to potentially get some short exposure. So that's going to be the two plays. In short, you can get more detail and more of granular analysis in the previous video if you would like. But from here, move down was really great in terms of exposure. I was mainly playing the FX, not really looking at the S&P, but good move overall. And at this point, it's just a matter of we might consolidate a little bit further. We are still within the wedge, obviously, so we could go deeper into it. This is the apex all the way down there. And at this point, as the wedge gets smaller and smaller in terms of the price moves, you're really just going to have to wait, be patient, and wait until the break either to the downside or upside. Because at this point, if you're looking to get from either resistance to support or support to resistance, there's not a whole lot of movement that you can actually capture. So in my opinion, it just makes more sense to be patient, wait it out. We got a really good move from top to bottom. And at this point, we're just going to be looking at some potential plays if we either break up or down. But it does look like we got quite a bit of sell pressure, lots of volume coming in. We are holding this nice little support there. But overall, within this week, we've been making lower lows. Initially, we held a resistance here. That was a pretty poorly drawn resistance. We held a resistance right there, and then we made a substantially lower low, and then this is a lower high. So now we're making a series of lower highs and lower lows, which is obviously a bearish structure in terms of a formation. So that's going to be the S&P. At this point in time, it's a Friday, so I wouldn't expect some crazy moves to happen. It already did, basically. That is the move. I think we'll probably consolidate here. It's 9:30, so it's a little bit of a lull time, especially because it is PST. Now I'm not on the Eastern side. So we'll probably consolidate to some degree. Maybe at the end of the market close, we will see some push either upside or downside. But as of right now, I think Monday, Tuesday, early next week is going to be the decider of if we're going to continue and potentially look to the upside, or if we're going to really melt down, because we do see significant increases in cases of the virus. So there's worry, obviously, with the economy opening up. There is increase in cases, and we'll talk about that a little bit more when we do get into the chart there. All right, quick look at the questions here. RE Pet, how much would you say you've gained since starting trading, like in my entire life? I do not know. I've been trading for over 3.5-ish years now at this point. First year and a half-ish, I did not make really any money at all. I lost, not a substantial amount. I was pretty good with risk management, but I don't know, subtracted by the amount I lost initially from the amount I'm able to create as of now, I cannot give you the exact number in terms of the gains from money putting in through hours of work and then being able to multiply it in the markets. So that's a pretty hard question for any trader, I feel like. All right, so let's continue on with the analysis. We're going to quickly look at the Russell 2000. Not a whole lot to talk about. We already talked about the squeeze yesterday, and really not much has happened. We're looking for this ascending zone to potentially break, as well as the break of this horizontal support, creating a completion of the head and shoulders along with the ascending trendline breakout, which is, in my opinion, a pretty solid structure in order to look for some potential risk off situations in other markets. Everything, usually not everything is perfectly correlated, but it's all one mechanism in terms of capital flow. People get fearful, people get greedy, and overall people move their money in places that are either more risky or less risky depending on how they're feeling. So we don't really see a break yet, so currently we're just consolidating. If we see a break below this zone, as well as the S&P take a bit of a tumble, that's definitely going to put a lot of bids in currencies like the US dollar, Japanese yen. We're already seeing them move up quite substantially compared to things that have been doing well in recent weeks. That is an extreme risk on currency, like AUD, like New Zealand dollar, and even BTC has been doing well, and it's been falling a little bit too, so we'll look at that a little bit later in the video, but we're just going to go through the indexes as of now. So no break yet, so no real decision on the Russell 2000. NASDAQ has yet to break our minor level of support that we've been talking about right around here. Does look like it is going to close below the zone, but we always want to see where the 1 hour, 4 hour close, depends on what time frame you're looking at, but I don't really look beyond the 1 hour too much as of this point. So it does look like we are breaking this zone here, which is definitely signifying sellers taking more of the confidence, more of the conviction, being able to push it back down, buyers being a little bit worried, a little bit fearful, taking on less risk. And like I said before, if you're looking to short any index, NASDAQ would not be it. The Russell 2000 is a lot weaker compared to the NASDAQ, and if you're looking on a global scale, definitely the UK's FTSE 100 is weaker than a lot of the other global indexes. Looking at the DAX, looking at the Japanese stock market, FTSE is definitely pretty weak, and so is their currency, the GBP. So that's the NASDAQ. We do see a little bit of a drop below our support. I'd like to see it validated with a 4-hour candle closure, and if we're able to close below the zone by the end of the day, I think Monday we might get a little pullback, but the sentiment is going to be more bearish, I think, if we do get some sellers to keep the price and the pressure on the NASDAQ to close below the $9,900 zone. Volatility is picking up a little bit here. We do see that minor level of resistance at around 36, 37. I'd say 37. Get hit yet again for a nice new level of, or same level of resistance. But there's a bottoming. So we made a higher low on the VIX, which if you're looking at a potential bearish opportunity, that is a good thing, because when volatility is increasing, it's a risk off sentiment. Usually when it's, chugging along nice and slow, when you want to be long the S&P, you want to see it hover, not really spike. This is not what you want to be in if you are long the S&P. So the fact that this has made a higher low and is now coming back up and is kind of making a nice little bottom here. If we look at in different time frames, BTC bottom in the 2018-2019 consolidation. If you look at gold, you see a series of lower lows, a bottom hold, and then you start to see it pick up and then see some higher lows, and then you get this nice bowl shaped bottom with a key breakout zone at the resistance. And I think that's what we're creating right now, as long as we're able to hold this higher low, and then if we're able to make a little bit of a higher low, that would really create a nice structural bowl. And then if it breaks that zone, that is when I think volatility would be increasing, which will probably mean the S&P is going to be dropping a little bit more. So it makes sense in terms of the correlation between the S&P and what we see within the volatility. We're still hovering around 3K. So if let's go back to the S&P 500. If the S&P breaks 2970, which would be a meltdown of the descending wedge. So if it melts to the downside, breaks 2975-ish, I think that the VIX for the S&P would be breaking 36, maybe even $40 and really, really charging upwards here, which would be, you would not want to be long the S&P. You'd want to be long, what would go up? I guess you would be long US dollars, Japanese, risk off, depending on how severe it is, because gold is right now slightly negatively correlated to the S&P, the Russell 2000, the Dow Jones, the NASDAQ. But if we do get another liquidation event, we could see gold move to the downside as well, like we saw back in early March when we had that initial sell-off. So gold isn't a true, complete negatively correlated asset compared to a sell-off within stocks. I would say that would be the US dollar or the Japanese yen that you would be looking to long if you're looking for a direct negative correlation between the stock market sell-off as well as something going up that you can long if you don't want to short the stock market. Just some options that you can play in within the financial markets here. So that's going to be the first section of the analysis. Quick look at some bonds. And this is the US dollar currency index. We'll look at that a little bit later. But we do see bonds dropping here, the yields. So that means that investors are flooding into US bonds because it takes less of a yield to incentivize investors to park their assets in these US bonds. So obviously, if this goes down, it's pretty risk-off sentiment. If people are looking to get in bonds with the yield at 0.639, that should tell you something. And the 5-year yield is at less than 0.3%. So investors are worried enough that they're willing to have an ROI of like less than 1% over a 10-year period. It's really not much, but that's what people are doing. That definitely gives you some indication of how worried investors are globally, in my opinion. So let's look at the 4-hour here, because this is basically the inverted chart of the Euro USD. And we already talked about this potential level of resistance. We can probably create a nice ascending zone like so. And I think ascending wedge is going to be the structure that we're going to be using for this. Not perfect. I think this might be a bit of a channel actually instead of a wedge. Depending on how you actually draw it, you could put it up here, resistance into resistance, depending on how you draw it. And then you got a nice little resistance zone that's probably going to be hopefully stopping the price around here. And then if it drops further, that would be a weakening of the dollar. And then if it continues to go up, that would be strengthening of the US dollar, obviously. So we'll go like that. We got a little resistance here, but like we said yesterday, this is now going to be more, in my opinion, of a potential ascending triangle compared to a continuation if the market does move to the downside. So that is going to be my analysis on the DXY. We'll see how it goes. This is a pretty important level here at 97. If it's able to break above this major zone, that definitely signifies that a lot of people are coming into the US dollar, which is a pretty risk-off sentiment. Crypto will probably be going down as well during that same time. So we'll see where that goes. I got a quick chart of the total number of deaths from the virus. Still climbing up. We're still under 500,000, but yeah, it doesn't really seem like it's stopping. We haven't really covered it too much, but I thought I'd leave that on the chart just in case people do want to be looking at it. So that's going to be equities, a little bit of currencies, a little bit of bonds. Now we're going to go on the global stage. Quickly looking at some global markets here, we can see the Japanese stock market has been doing pretty well. We got the high before the crash. Let's see how far it came up. Okay, I got it right here actually. And this is just to see how far we're tracing back. So we're above the 78.6 previous resistance, new level of support. And it looks like we got a nice triangle here. I'm not going to be trading it, but it's just good to understand what's happening. We've got a nice solid base of a previous resistance, new level of support right around here, but it does look like we are forming some lower highs. So it could be a descending triangle. It could be a symmetrical triangle if you have a nice little support here. And that could be either a continuation pattern to the upside if risk tolerance is able to sustain itself during these uncertain times. It'll continue to go up, but if worries of this disease spreading rapidly is going to increase and there's more fear and uncertainty in the markets, it'll obviously be dropping the support, where the Japanese yen would probably be a better place to park your capital if you are an investor in the Japanese markets and currencies. Quick look at the ASX, which has not bounced back nearly as well as Japan. Got a nice base at around 5,700, got a lower high, very similar to the Japanese markets. Global markets altogether look somewhat similar, but we can definitely see that it's formed a lower high. It is not really gaining the buy volume that it was on the way up, and we're just in a consolidation at this point, not really looking to extremely be on one trend or another. At this point, it looks more bullish if you're on the daily chart, but if you're on the 4-hour, the hour, and if you're kind of take into account the overall global state at which we're seeing economies opening up, but there's worry of increased cases, we're at a pretty pivotal point where we could be at a lower high for the next potential move down. We do want to be careful and mindful of that situation from occurring, and then we are looking at key levels to be broken before we make that major decision. Like we said, the FTSE 100, the United Kingdom stock market index, has been a lot weaker compared to the DAX or the Japanese stock market. We can see that we're really slowly grinding up, holding a ascending trend line right there. I was going to say wedge, but triangle, something like that. But that's going to be that trend line right there. We see an initial support resistance turn into our ascending support zone, slowly picking up the price each time it does bounce on the higher low. But if we do get some level of a break, this is going to be the mid-range zone that I'm currently looking at for the UKX, which is the FTSE 100, around the $6,100 zone. So if it breaks that, that's going to be a lot of fear in the overall market. And we can see a lot of these indexes have these zones pretty well, not in the exact same spot, but in a pretty similar spot, because not all markets, but a lot of markets are correlated. Usually risk on assets are correlated, especially in the globalized world that we live in today. So we can see a lot of our indices that we are looking at is in pretty important zones. Let's just move that and go like that. All right, so, and then this is the DAX, this is the German exchange, and we can see it's in a very similar situation as well, where we're holding a nice level of support, which was a previous resistance, formed a lower high, and we're also holding an ascending zone of support as well. Not perfect on the DAX, but overall, we see a trending market to the upside where we're basing, forming a lower high, and if it breaks the base on all of our exchanges, that is when we're going to have to shift our mindset to really look at some risk-off exposure trades. Last thing we're going to look at is some metals. I don't really see any questions coming into the chat, so we're just going to jump right into. First, we're actually going to look at gold. Gold had a major move down, but it is picking back up here on the 4-hour time frame. Around 15 or 16 minutes left until this 4-hour candle closes, but massive wick to the downside. But the candle was still able to hold the previous resistance right here, which is now acting as a new level of support. So it does look pretty good. Lots of volume coming in, and did break the minor level of resistance that we were holding within that zone. Actually, not yet. I'd like to see it close above this zone, and then that would be the indication that buyers are now present and going to push up the price. And this is that breakout that we initially had right around right there. And then we had the horizontal zone at around 1675 right there. So that was our squeeze that was occurring within the markets. And then we had a little bit of a triangle right there. So what we're looking for silver is similar to what we see right here. So let's draw it in. We initially had a descending zone right here, and then we also had an expanding zone like this. So it wasn't great. It wasn't looking good. But what we got is after this expanding zone consolidated, held the lower low support, we started forming a series of small higher lows within the expanding range right here. And then it created into a symmetrical triangle where we saw a series of lower highs and higher lows push the price towards an apex of the squeeze or the funnel. And then we got our move to the upside, and that is what we're looking for, is for the price to complete the squeeze and for us to capitalize on the potential shift in trend before the next major impulse move comes into play. So we can see that occurred on gold, and silver is looking like it's in a very similar situation. We initially saw this descending zone. We did not want to enter just yet, so let's just draw that in initially. And then we saw a horizontal zone right here. So we initially had a descending triangle pattern, but what did we see play in as the price continued upwards? We saw a nice little ascending zone. So now we're creating creating a symmetrical triangle within silver, which, as long as gold is holding its ground or appreciating slightly, I think silver is going to be doing pretty well here. And let's get our projection and go like that, make it red. So we got a nice little resistance zone. That was not really red. There we go. And then we got a nice little support. So that's going to be the structure that I currently see within the overall market. I think that could be a wick if we go on a smaller time frame. Yep. So that looks like a great overall structure. If we even go back like here, get our little projection zone. So yeah, I'm really looking at silver instead of gold here for potential next trade in the metals. Gold does look good for a potential play, but the gold and silver ratio, if it breaks down, is going to be looking better for silver overall. We talked about this little ascending zone If we jump into the 4 hour, so this is the gold and silver ratio. When this is going down, you want to be in silver more compared to gold, and we can see it's forming an ascending zone somewhat, so it's a potential continuation pattern to the downside. We're going to wait until this possibly breaks the ascending level of support, maybe somewhere around here, before we really look to potentially get on silver. But it's looking pretty good fundamentally speaking, as well as technically looking at gold, silver, and the gold and silver ratio. It all looks like it could be a good potential trade for next week. I'd say it's definitely a little too early at this, or a little too late at this point. You're not really going to get a move on a Friday, and then you got the weekend, so I don't think it would make sense to enter before the next upcoming Monday. So this is going to be a potential trade that I'm going to be looking at if it does break and retest for next week for a long on silver, as long as gold's looking pretty good. I don't think I'll be touching gold. I think it'd be more looking at silver, in my personal opinion. So we'll see how it goes. It's looking pretty good. Touch that zone and it's closing. I really wish that it would close above that zone near the high of the candle range on the 4 hour. That would be extremely bullish, but the main thing I'm going to be looking at is going to be silver, and then we already touched on the gold and silver ratio. Final thing we're going to look at is some crude oil. It did make a push to the downside here, and let's just go to the daily chart. Formed a little bit of a bull rally. Momentum is to the downside, obviously, and then we got our pretty key level of support at around $36. Previous level of resistance we can initially see right here in early March. So if it does form that double top that we were initially looking for right around here, and then that breakout zone is around $36, would not be surprised if we get some level of a sell-off. I think it does matter how aggressive the equities market sells off, but overall I think a sell-off would not be too surprising here if we do get a bit of a bearish move. And then the next zone would be right around here that we'd be looking for. So that's going to be for oil. Obviously, if there's more lockdown, there's less oil consumption, less oil demand, which is going to drop the price of this commodity. So we'll see how it goes. Technically speaking, it is still consolidating. We do not want to create a bias that it's now turning over, because it has not broken any major supports that would indicate a major shift in trend. We went from a bullish trend to now a consolidation. My potential thesis is going to be that this is a volume distribution phase, and we're going to now see a move to the downside, but we don't have that validation yet, so we can't make that decision and say that the trend is now to the downside. Right now, it is consolidating sideways, and that's the way I view the current market. So that's oil. Not really like trading oil, so it's just more of a risk sentiment analysis that I do for the global macro updates here. So we did all that. That's good to know. Going to be looking at some stuff in terms of the crypto market just to finish off the week. But going to quickly look at some FX markets here. And if you have a question, just drop them in the comments. Not a problem. I will be answering them to the best of my ability. So if you'd like, definitely drop them down. So I'm going to keep the S&P here. Going to get a little bit of coffee. And then look at some of the charts that we're looking at here. All right, so I guess we'll look at a little bit of some FX. Not really going to be diving into a whole lot, but so I'm looking at two things: Australian dollar, US dollar. Why do I think that? Let's just talk about a little bit of correlations in terms of looking at what we just saw in terms of the different commodities, different indexes, and then also playing into the FX market. So if our thesis of the market going down is going to play out, what would happen? Well, normally Australian dollar would be going down as well. It's highly correlated with oil, and it's a risk on currency. If we go to correlations in the past, let's say 30 days, the Australian dollar, let's just quickly look here, is pretty correlated with things like the Dow Jones, the S&P 500, and the NASDAQ. It's a risk-on currency. So it makes sense that I kind of view this as the same as the S&P, right? If odd, Australian dollar is so positively correlated with the S&P 500, Dow Jones, it's very similar because the S&P 500, Dow Jones is paired with the US dollar, right? So that's kind of the way I view it. And then US dollar, Canadian dollar is very weak relatively to a lot of other risk on currencies. It's relatively weaker than the Australian dollar, the New Zealand dollar, even GBP. Canadian dollar is pretty damn weak right now. So if you are looking at potential shorts, why not short the weakest risk on currency that you can find and long the strongest currency if there is major uncertainty, fear in the markets? And we saw that happen in early March where everyone flooded to the US dollar when there was uncertainty in the world. So that's the pairing I'm currently looking at in terms of fundamentals. It just to me makes sense. And then this would be a risk on. So if the equities market breaks to the upside and we get a descending wedge break where it's a very risk-on sentiment move, odd USD, in my opinion, would be a good opportunity. We see a nice continuation symmetrical triangle that would be playing a good move to the upside if we do get a risk-on move. That's a big if, in my opinion, but it's good to be prepared. That's going to be my analysis for potential risk-on. If the overall risk-on environment continues, that's going to be the play that I'm going to be looking for. And if there is more worry, fear, uncertainty, US dollar, Canadian dollar, I think would be a better play because in terms of relative strength, the Canadian dollar is weaker than Australian dollar. So for risk on, you want a long Australian dollar. For risk off, you want a short Canadian dollar. And then the US dollar pairing is just an extremely liquid pair. So it's a good thing to do. And you're kind of comparing negatively correlated pairs. Like if you're trading Aussie Kiwi, that kind of doesn't make sense because they're so correlated. They're not going to move as much. Usually you'd like to see negatively correlated pairs move. And that's the one you want to be looking to get in because obviously when one currency goes up and another currency goes down, you're going to have a far greater move compared to if they're both going up or both going down. All right, so that's a little bit of talk in the FX. It's a Friday. We're keeping a little bit more casual. We might look at them a little bit more in greater detail, but we're just going to look at some other stuff here. In the realm of crypto, gonna get a little bit of coffee and then we'll jump right into it. They're gonna first look at the weekly, starting from a large time frame and then working our way all the way down to the 1 hour chart. And this is Bitstamp, one of the longest running charts other than BLX. All right, so let's do our triangle that we've been talking about for a very long time. Right here. Oops, that's not green. And there we go. Right at the resistance zone. And then I like to put in this minor level of support right here. This is going to be around $8,500, and if it breaks that zone, that's going to be a point where things are really starting to shift and turn, in my opinion. Let's put that up right to the candle closure. A very important zone. And then let's get the projection right there. And that looks pretty good as of right now. So in terms of crypto, we're just consolidating within this box. If you're a day trader, yeah, you theoretically could be looking to short at the highs, long at the lows, but as a swing trader, during these situations, it makes sense, in my opinion, to wait until the square or consolidation breaks out to indicate either if it's going to be a volume distribution phase or a volume reaccumulation phase where you're looking for continuation patterns to the upside. In my personal belief, with the equities market moving down, if that continues, this will probably move down as well, as crypto being a risk on asset for global investors. It makes sense with things being correlated. How far is the big question. If it does move to the downside, I don't think it'd be as aggressive as we saw with the 50% down move back in early March, but you never know. We do have a series of higher lows that is holding with a massive wick to the downside, indicating lots of buy pressure above the $4,200 zone, which was the previous resistance right here. I'd ideally really like to see some consolidation instead of a massive V-shape ascending wedge melt up that didn't really base well. I like to see consolidations where you see a series of lower lows, a base, and then a series of higher lows holding a key level of resistance. Once that resistance breaks, that is going to be your confirmation that the base has been completed and the bulls are taking control, taking conviction, moving the price higher, breaking resistances, holding supports. Those are the types of bases that I like to see. And in my opinion, we're kind of creating a similar base right here. So if we're looking at, let's just get our zone right here. If we're looking at this, this is the kind of base we're looking for. So if we turn it around, which I believe we can flipped. Oh, that's the wrong way that we're looking for. We don't want it flipped. We want it mirrored like that. Obviously, it doesn't look exactly like it, but that is somewhat of the base that we are potentially seeing right here. So if we get a move up, and let's make it white, and there's that nice retest that we're looking for. So if a move does come, let's just make it a little bit higher like that. That's going to be something that we're looking for, maybe a little bit smaller, kind of like that maybe. That is something that we're looking for, maybe on a smaller time frame. Probably going to be some sort of continuation pattern to the downside. If it breaks the $8,500 zone, that's going to be an ideal situation for a continuation to the downside. Also, cool question from Ultimate Max. What are we looking at? This is the weekly chart for Bitcoin compared to the US dollar. And we're just looking at some potential outcomes if we do break the $8,500 zone. That's going to be the first potential outcome. Also looking at how similar it is to the basing that we got right here, but it's inverse. So we're created initially a series of higher highs. We made the peak high, and then we're now making lower highs. So we got a nice topping rounded bottom, and then we got a strong key level of support that I think if it does break will trigger a wave of sellers to come into the market, fear to kick in, because since April, definitely by May of this year, everyone who bought from May 1st onwards will be in red, which is going to invoke a lot of fear and uncertainty in the investor pool of crypto. And, obviously, if there's fear, uncertainty, there's going to be more selling. So we'll see how that goes right now. The main zone we're going to be looking at for the weekly chart is going to be the $8,500 zone. But in terms of the smaller time frames, we'll get into that right now. Let's go back to the weekly really quickly. Anything on the S&P? So Ultimate Max, we did already talk about the S&P in our video, so you can go back, and we already talked a lot about the S&P and global equities, and hopefully you might get some entertainment, education, something that you like that we already talked about. But we already went through all the global equities, so you can find that within the already recorded part of this video. And then now we're on the crypto market update, just looking at BTC. Looking at starting from the weekly and then going down in time frames. And we can see a nice wedge right here when we go really into the small time frames. But on the large time frames, we just see a symmetrical triangle. And then this is a daily chart, so we can really clearly see that horizontal zone of support at around 85, right at the low right there. And we can just move that like so. So that's going to be the main zone of support that we currently see. Let's just make that green. And there we go. But we also see an ascending support as well that we do have to keep in mind, which is right around here, which I will put a projection because it is connecting a series of higher lows, which is well respected. So we're now in a pretty tight squeeze. I don't personally want to be entering until we break out of the squeeze to the downside. Your first option, in my opinion, let's just get a snip. So you got two options for short exposure in terms of BTC. If you are expecting the overall risk-off sentiment to continue, if you expect this to roll and then break to the downside, you got two options where you could be looking for short exposure. The first option is less dependable but higher RR versus reward ratio. The second one is more dependable but lower RR, in my personal belief, unless you're like really looking for a massive capitulation. You got some good targets here that you can look at. But in terms of overall trades, you got option number one. If it breaks this ascending zone of support, you already know that you're getting a squeeze from the sellers on the top. So once it breaks this series of higher lows right here, you got multiple touches. The first initial entry point would be an entry at the break of this support. Hopefully you get some sort of pullback, and then you'd be looking for entries when it's retesting this previous support as a new level of resistance. That's going to be the higher risk reward, lower dependability trade, because you could get stuffed at the support zone at 85. Theoretically, that could happen, and your trade could become invalidated, and you could get your trade stopped out, or you could just move the stop loss to the entry once it goes to that level, and if it does go back up, well, you're not really risking a whole lot. But that's option number one, less dependability, higher risk reward. Option number two is waiting for the price to not only break the support zone here, but you don't want to be trading it within option number one range. You want to be waiting for confirmation breaking below the $8,500 zone right around here. Once it breaks the $8,500 zone, then you will be looking for continuation patterns to the downside. Ideally, you'd either be looking for a retest where you're retesting this previous support as a new level of resistance. That's just a simple retest potential entry. Or you could be looking for continuation patterns to the downside where you're looking for actual price action structures on the 15-minute, the hour chart, even the 2-hour. I don't know if the 4-hour would do it for you, but you're looking for either ascending zones, descending zones. You're looking for maybe a wedge, where you're looking for like a wedge like that, even like a meltdown wedge, something along the lines of that. That is, in my opinion, the structures that I'd be looking for. I guess you could be looking for consolidation like that, but I like to see a squeeze and a contraction in volatility. Something like a wedge or a triangle, like you can see here, would be the ideal situation for me in order to get some short side exposure. For the second option, if we are waiting for more of a confirmation below the $8,500 zone. So that's going to be the overall analysis on the daily. And that really just plays into the 6-hour as well, because we do see that same ascending level of support, but on the smaller time frames, we can see that there is actually a descending wedge forming, similar to the S&P, where we have our first touch, second touch, and then third touch, creating our descending zone. And then we also have resistance, resistance, support, 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 support. So then we can just connect those lower lows, and that's going to be your support zone. So you got a nice little wedge here. Could melt down. It's, in my opinion, the higher probability that it does melt down, and then you got a nice little confluent zone right there. So you could adjust it a little bit, but what you're looking for a potential move to the downside, a retest of this zone as a new level of resistance. And you got this support zone right here, which is going to be acting as a zone of confluence for sellers as well. So that's going to be the higher probability situation. But if, for example, the S&P does hold, BTC holds this support, it doesn't break this support zone, you could be actually seeing another little rally attempting to hit the 9.9 around there. So we'll see how it goes. Right now, the higher probability, in my personal opinion, is going to be to the downside. So that's going to be my analysis on BTC. And let's just take that out. And then on the 1-hour time frame, we do see a really small triangle appear. If we are just looking at that zone right there, nothing really to, I'm not really going to be trading anything like this because it's a Friday. For one, weekends are usually less busy. And I would just rather trade looking on a larger time frame, waiting for that major break to occur before I really take action on BTC. So that is going to be my overall analysis, my viewpoint on BTC. All right, so if anyone has any questions, definitely drop them in the comments. We are not really seeing anything on BTC dominance or the altcoin market cap. Don't really see a whole lot. I'm just looking at some pairs with, instead of USD, we're looking at Japanese yen and we're comparing it to euro. So it's just a quick little analysis. Basically, it looks very similar because BTC is so much more volatile compared to every single other currency. But it's good to know. So that's going to be my video of the Friday. Hopefully you're enjoying the week so far. I'm going to keep this on. I don't really have a reason to turn it off, really. Let's just see how the trades are doing right here. Not awesome, the fact that we're coming back. So let's see what we're doing here. GBPJ, GJ. Really, really nice squeeze that pushed to the downside. And now we're getting a little retest here as the SPX consolidates. A little bit of risk on sentiment coming back into the air. But this is a nice little support there that's probably going to be used as some level of resistance. So no worries on that one. Cool as a cucumber. That's totally fine. USD CAD's or CAD JPY, not USD CAD. CAD JPY was a little bit worrying. The fact that we actually bounced over is not absolutely great. Let's make that a little bit like that. But we are still at a resistance point. Like, we do see a lot of rejections at that zone. We don't want to make it too small of a zone. If we just back up a little bit, we've got a very significant candle closure there. Yeah. Still looking all right, definitely. And then we got a pretty large zone. So I'm just getting this area to here. I guess you could go a little bit higher up. A little bit higher up. Still got a really solid risk-reward situation to go off of. And then you could be, I guess, assuming that there's going to be a wedge of some sort. If this is a meltdown, it does look like a meltdown. It come back up. Yeah, I'm pretty happy with it. It was just the main zone of support that I saw broke. And then I just got a nice little stop entry at that zone. Previous high is going to be right here that I'm keeping above. And that's the current trade that I have for CAD JPY. So why am I looking to short CAD? Like I said, the relative strength for CAD is weak. Let's actually look at it right now. Why not? So, let's just zoom out a little bit. So why did I pick, out of everything, CAD? And let's discuss why. So how do we find out relative strength? We could do it with anything. We could even not even do it with FX, but we could do it even with equity. So we want to do SPX 500, this guy right here, versus the NDX. Oops. Versus NDX. So we can compare the S&P 500 to the NASDAQ. So what can we see right here just by looking at the overall chart? Overall, NASDAQ is outperforming the S&P 500. Over, if you're looking at a 2-day, at a weekly, look how strong that is. So by far, if you had to be in one or the other, you'd be looking at being in the NASDAQ instead of the S&P 500. You could do it with a bunch of stuff as well. SPX 500 USD. DJI. So this is the SPX versus Dow Jones, and it's moving up slightly. So this would be relative strength for the S&P 500. So you'd be looking to be in the S&P 500 more than the Dow Jones during this move up here. And then when you're seeing a consolidation down, this is when you should be in the Dow Jones instead of the S&P 500. So relative strength it's extremely important for sure. So then when we're looking at it in terms of, I guess in the currency realm, because you could do it with equities, you could do it with crypto, you could do it with currencies, you can do it with anything. Comparing one thing to another and using different time frames and simple TA is very powerful. So why Canadian dollar short out of everything? I'm Canadian. You'd think that I should be supporting my native currency, but just looking at the different risk on currencies, we can see that Canadian dollar is relatively weak. So first, let's do AUD CAD. So we're viewing the Australian dollar versus the Canadian dollar, and we can see it is trending. Oh wow! Initially, it's trending down for a while. So Australian dollar was weaker, and then recently, I was looking at a smaller time frame. This is a 2-day. Recently, we can see that the Australian dollar is way more aggressive to the upside compared to the Canadian dollar. So if we're looking on the 4-hour, I'm mainly looking on the 4-hour daily for overall trend. Don't really look on the weekly and 2-day. It's a little too large for me. But on the 4-hour, 6-hour, we can see we're in a strong uptrend, even going on the 6-hour, where Australian dollar is strengthening compared to the Canadian dollar. So right now, Canadian dollar is weaker. Well, New Zealand dollar is similar to the Australian dollar in terms of correlation. So we can do New Zealand CAD. A little bit less. We did get a bump up. We're really right at a key level of resistance right here. We can see big rejection, but big rejection here, which is going to be acting as a new level of support. So this is a base. If it breaks to the upside, it's going to be weakness for the Canadian dollar. If it breaks to the downside, it's going to be weakness for the New Zealand dollar. But AUD CAD does provide, in my opinion, a little bit better of an overall momentum to the upside. So in terms of Australian dollar, New Zealand dollar versus Canadian dollar is definitely weaker. Well, how about GBP? GBP CAD. GBP is definitely looking like it is weaker than Canadian dollar right now. Bit of a consolidation, not seeing a huge shift. Can see GBP is getting a little bit weaker, and overall the market trend is down. We can see nice ascending zone that broke there. Nice ascending zone that looks like it's breaking support right there, making nice lower highs. Definitely on a downtrend. We got a major level of support right around there. So we do want to keep that in mind. So GBP is weaker than CAD right now. So yes, theoretically, if you had to short one, Canadian dollar is weaker than Australian dollar, but GBP is weaker than Canadian dollar on right now in terms of short term. So GBP is probably weaker than every other risk on currency as of now. So I was wrong on that one. It's not the weakest. It's probably the second weakest. But I did look at this guy here, potentially. So Canadian dollar, GBP, we'll see how it goes. Canadian dollar doesn't look absolutely phenomenal right now. Did break that minor level, but we are right at a zone of confluence. So I gave the price enough room. We'll see where it goes. But GBP is looking not too bad. So that's why I looked at GBP as a short, as well as CAD. Australian dollar, New Zealand dollar is not really going to be something I'm looking at for any shorts. Those are going to be more of the long side because they are relatively stronger compared to the other risk on currencies. And then you're looking at which one should I long, and you're looking at things like CHF, which is a Swiss franc. You're looking at JPY, which is a yen, and you're looking at things like the dollar. So if you're looking at USD JPY, you can get a good understanding of which one should you be longing and shorting. So right now we're just in a consolidation. Yes, we did get a bullish push, bearish pullback, but we're just kind of consolidating in between zones right here. So I guess if you really want to be technical, you're closer to the support. So it could have a higher probability of moving to the upside, probably going to be the path of least resistance. So overall, I do think that if you had to pick, you'd rather be long USD potentially rather than JPY, but they're both pretty well risk off currencies, so you shouldn't really worry too much about it. So that's the current formation I currently see right now. Let's just make that a little bit less. So that's USD JPY. Let's look at CHF or USD CHF. Wow, USD is weakening against CHF. So CHF is pretty strong right now. Wow, I'm a little bit surprised actually by that. That's a little bit surprising. So USD is weakening compared to the Swiss franc. Well, let's just see The Swiss franc compared to JPY. Okay, so JPY is weaker again with the Swiss franc. So Swiss franc's pretty strong. Wow. Okay, well, let's do Swiss franc euro. That is moving down. Yeah, so Swiss franc is pretty strong. I'd say it's one of the strongest in terms of relative strength. Yeah, definitely. I would say that. So I'd say CHF, JPY. Bit of a consolidation. So I'd say CHF, JPY is in some really good opportunities if we are looking for some risk-off situations. So that's basically how I do my currency analysis. I look to see if we have any major risk-off currencies and major risk-on currencies that are moving in a negative correlated fashion, and I pair them up to get the strongest possible move I can find, or the most negatively correlated situation I can find. And that is overall how I try to find good pairs to trade. All right, so that's the overall market analysis. Not really going to dive in any more in depth because basically at an hour now, and I could be talking for a very long time. So thank you very much for watching. I really appreciate it. If you have any questions, drop them in the comment section below, and I'll be sure to answer them. I will be closing the TikTok, so if you have any questions, go back on our YouTube, ask the question there, and I'll be able to read it and then give you an answer. So thank you very much for watching. Appreciate it. Until next time, have a good one. Nope, I don't want to see TikTok.